attacked by a pack of dogs. But she said it's okay. I got some wilderness skills beneath my belt. She said she used to be a part of a scout team. They nearly beat a leader one time. But they didn't have enough thread to sew the patches on. She said, you know how you heard about the family that burned down in that house? Well, that was her. She said it was just some hoax that you made up to watch people cry. Yeah, she whispered to me softly. To die by a river. She wanted the tide to come up and drag her away, so that when she's dreaming, she could watch the tree line fall away. She used to draw rainbow faces in the sand. The rainbow made the face sad. Had bits of foam coming out the bottom of its mouth. It's kind of funny that way. What do you want? How I am? Do you need me? Where I stand.
Wednesday morning, US 30. We have 5 this morning on Zoom, and we did not catch trade either. I'll walk you through it here real quickly. The trade could be brewing. So we have a sweep of the daily previous low here that happened at in the Asian session, and then we failed to take the low out, so there wasn't really a sweep here in macro that we could have got into, right? We didn't know that price wasn't going to here retrace into this, see this bullish gap right here, multiple gaps come into it, consolidate, then take it or go up, wasting time, wasting your options contracts timing. What it actually did here is took out the New York PM highs. It's the high of yesterday. Here's where I called the trade yesterday, but didn't get in because it was just a minute past my time, kind of. You can see this trade panned out 140, 150 points to the high. It did not seek the premium array here. So we have this retracement back, and then we have this sweep. So it's a redistribution sweep of the daily previous lows here. And then one more move up, attempt up, took out the New York AM highs, redistributed back and failed to sweep the lows, failed to come back to an order block. So we just trade our mechanical edge. We do not know what price is going to do, right? It's just guesswork at that point. If it didn't sweep it, we stick to a mechanical edge, right? And no guesswork. Here you have your low. Could have came up into here. I'll show you. comes into it, could have consolidated, we don't know, wasting tons of time, takes a load again, then goes up, we don't know. So we don't get into trades that don't sweep liquidity. In fact, the way, I'm going to make sure we didn't sweep the high on futures here real quick. I just see the price coming down and displacing here. Oh, daily previous high, I want to make sure it hasn't been swept on futures. $60-minute should tell us the truth here. No, we didn't. Or wait. Let's go to the 1 hour. Weather monitor. Okay, we came shy. I'll mark it in. Daily previous high sits right here. That'd be funny if it came shy again and then went down the other way. That'd be, in this time, it just tricks you and comes back for it, right? That's how markets punish people who make guesswork. FOMO and guesswork, that's how you get destroyed over time. Might work one day, might even work the next. It's not going to work over 1,000 trades. That's what we look for, is longevity in the markets. I know from being punished myself over and over and over again. Just punished. Anyways, let's go back to this chart here and just conclude what I was saying. We'll start looking for a trade. So we couldn't get in here, and right when we were sitting right in here, I said the draw on liquidity wasn't these weak little liquidity points to the left, it's the daily previous high, and look what's sitting above it, magnet, daily bearish gap, right? So we're going to redo our bias method here quickly when it reaches up here to the macro, right? About 5 minutes left until we enter the second AM macro for the unicorn model itself. We're going to do a quick trend check. You can see we are now trading well above the 200 EMA on the 15-minute, moving to the 30-minute. We are now trading well above the 30-minute on the 200 EMA, on the 30-minute. Then we go to a 1 hour, and we're trading above it as well, but we're looking for 2 out of 3, the 15, the 30-minute, and the 1 hour, 2 out of 3, to determine the micro trend, not the macro trend. Macro trends are up. They have been for 2 years almost. Trends are now up. So we're in an uptrend now. Right? Yes. We want to seek into the premium here and take out the daily previous high in the bearish gap. And that's where we would look for a sell. If it happens, great. If it doesn't, whatever. So I think we can get rid of these EMAs now. Move on to the 1 minute here. Let's look for an order block though. A high probability order block in the range. And there's none. 4 hour, I don't think there's going to be one. No, there's none. So what does it mean when we trade into a premium? It's not a random thing. We need a PD array, a point of interest of something that needs to seek equilibrium, both sides, the premium discount array, right? It needs to come into something to establish it. You can see, I'm going to pull back to the 1 hour one more time because we have time. When we leave the discount and seek array and premium, as I just discussed, you're going to have multiple redistributions. Here were buyers, rain on their parade. We tried to get in this buy yesterday. Did not seek the premium. Stopped dead short for people that had their take profits up here. Made the AM near PM high here, came down, rained on everyone's parade that had buyers that were down in here. Weekends, right? Getting yourself a fair value gap. Now, people got in this morning right here, and it pretty much came back down and almost rained on their parade, but they were probably moving their target into profit, so it wiped them out right here. the market, oops, sorry. I guess they felt like enough orders were filled, right? And they went this way. So this is the expansion leg now. The expansion leg now needs to or has to be exhausted in the premium, and we'll come back for fair value now on this leg right here. Back to the discount, whatever this expansion leg up leaves fair value, it will now need to return back into PD array of the discount, and this happens over and over and over again for infancy. It does not stop doing that. The way markets work. So let's take out the daily previous high in the macro. So let's draw the macro in. Starts right here. For the unicorn model. Not a continuation model. Continuation model, now the trends are up. That changes everything. I can't find 815. My mouse is too quick. Oh. DH daily previous high. All right, let's do it together. We have time here because we need it to come up into here. We can set an alert just in case doesn't take me very long though, like to do we need to line up the unicorn model with silver bullet. We need to line it up with a bias of some sort. We can't just take it off the liquidity pool itself. Mind you, this is going to be a pretty good one. So I find through my back testing that if you line up your order flow, I call it fair value bias. Yes, it is order flow. When you respect caps all the way up an expansion leg or the dealing range, it's definitely order flow, right? This being the dealing range we're trading in. So you can see that the daily, do it real quick. I usually just do it on my other monitor. You can see here the daily came down here and actually inverted this bullish gap right here, right? Making the daily bearish because it inverted it right here. Moving on to the 4 hour, you can see the 4 hour is still respecting this bullish gap right in here. The bodies of the candles, the 4 hours bullish, right? The 1 hour, you can see here, here's a 1 hour gap in here. And you can see that we still respected it this morning right here, right? So the 1 hour is still bullish until it seeks a 1 hour this way, up here. And you can see there isn't any at all until up into here, right? So the 1 hour remains bullish. Go to the 15-minute and you can see the price has respected this 15-minute bearish gap. Actually, I apologize. Didn't right here. Came up and respected and blew through this 15-minute bearish right here, making the 15-minute now bullish. Five-minute, as it seeks the 5-minute bearish over here, becomes bearish. So we have bear, bull, bull, bull. Actually, no, sorry. I'm sorry. 15-minute is bearish. So we're in a bearish gap right in here, and we respected it. So the 15-minute is now bearish. See how that works? Okay. We inverted this one, so I called it bullish with this candle right here. We inverted this gap right here. Seek 15-minute up here. So order flow is now bearish for the 15-minute. So we now have our bias for the silver bullet unicorn model entry. Just waiting for price to come and actually take the high. Let's make sure it didn't do it on futures. Still hasn't taken it on futures. We're actually just going to hang out here. And we're going to wait to see if that pool of liquidity sitting in that daily bearish gap gets ran through, whatever you want to call it. And then we'd be looking for a sell when we have confirmation of displacement over mitigations and breakers in market structure shifts. This is how it's done. This is how it's played. Not having the greatest week this week, but it's only Wednesday. It's Wednesday, Thursday, Friday left. It just takes me 1 to 2 trades sometimes to have a banger week. Although this week has been a little bit strange. There's some things going on with the feds and all that I won't get into. You're welcome to go research it though. It's all boring shit. We're going to wait for this liquidity pool to get taken up top here and see what happens. Like I said, that would be funny if both ends of the liquidity pools don't get ran through. I've seen funnier things with the US 30.
Where I stand, let's go steady. Let's make a plan. Marinate on that for a while. She wanted to die by a river. She wanted the tide to come up and drag her away, so that when she's dreaming, she could watch the tree line fall away. She used to draw rainbow faces in the sand. The rainbow made the face sad. Had bits of foam coming out the bottom of its mouth. It's kind of funny that way. What do you want? How I am? Do you need me? Where I stand? Let's go steady. Let's make a plan. Marinate on that for a little while. Yeah. She got attacked by a pack of dogs. But she said it's okay. I got some wilderness skills beneath my belt. She said she used to be a part of a scout team. They nearly beat a leader one time. But they didn't have enough thread to sew the patches on. She said, you know how you heard about that family that burned down in that house? Well, that was her. She said it was just some hoax that you made up to watch people cry. Yeah, she whispered to me softly. Do you want me? Just how I am. Do you need me? Where I stand. Let's go steady. Let's make a plan. Marinate on that for a while. Yeah.
All right, we're waiting for price to engineer liquidity, I guess, or do whatever it is price does, which is a bit strange these days, to say the least. But every week is different. That's the magic of trading. Never know what you're gonna get. There was some Instagrammers yesterday who were like, "Did you guys lose your accounts today too?" Lose your accounts? Why would you lose your account on a bad day? Like, and other people were chiming in like, "Oh yeah, I know, me too." I mean, other people were saying they won too, but it's like you need to, like, as though it's like a normal thing. Like if it was a bad day in the market, you just lose your account. This is what separates professionals from these Instagram, like, I don't know what you call them, get rich overnight type traders. And these, and the prop firms too, like they don't make it any easier on you sometimes too, like with these 50K accounts, right? And they hold it over your head, like, just buy another one, right? They're cheap. So like, I think the human brain remembers its patterns, right? So I should say I know it does, right? It creates conscious mind and stuff, and I don't want to get too deep into it, but if you keep doing that, like the reward centers and all that, like your dopamine hits and all that, like you're wiring your brain to never trade like a professional. So we don't lose our accounts in one day. But if you do guesswork and you just want to guess that the market's going certain places and use your what you think the market's going to do, then yeah, you'll lose your account pretty quick. So we have about 18 candles on the 1 minute left here before the end of this macro for the silver bullet unicorn model. And then we will be trading the 3rd AM macro as well. I'll usually do the 3rd AM macro over on my Discord, but today I'm going to do the 3rd AM macro on YouTube. So what we'll do is we'll take a pause. I'll end the stream, actually, because I don't know if you can pause it for that long. This would be a half an hour, I think. Yeah, half an hour between macros, and we'll come back to it. We'll give some extra YouTube sauce. We have about, today's the 20th of May, so we have about another 10 days of volatility volume, mostly volume left, high volume, right? before we start going into early summer months and summer months. So it would be nice to take advantage of it over these next 10 days, hold some nice trades. We have a bearish bias, yeah. You can get rid of that, it's nothing. This is the pool of liquidity here. I want to come up into that. Yesterday, I'm going to make a recap on yesterday's trade that I ended up taking a 0.5 minus 0.5 R multiple loss. Tried to get in off an expansion, thinking it was going to be the one that went after a short little sweep. I was actually, I diary all my trades, so I was actually looking at it, and it was like slightly outside of my model. It was like right between in my model and like discretionary. That's why we took a half. And but the trade actually ended up working out, as I showed you this morning, and paid out like 150 points to the high. And it was right at 9:15 a.m., like right when I usually call it. But I actually didn't see that it crossed the 50 right at 9:15. I just cut the feed early. Probably should have taken that trade, but whatever. Because the cutoff for me is 9:15 a.m., which is the end of the 3rd a.m. macro for ICT traders. And people use 10-2 to 10 after that window. Like that's the ICT sort of macro window, algorithmic window. I just use the quarter 2 to quarter after for the US 30. And it works fine because it works perfect with like the open 6:30 open, right? So you take 15 minutes to 6:45, right? The volatility for the first 15 minute, and then just consecutive 5-2, 5 after. And you can see like if you trade within those windows, it's just because like it works so well, because like that's when it actually reverses. Like this is technically reversal. It's an expansion leg, right? All the way up, it's expanding, right? From down here, pulls back, it's expansion leg into the premium. That's all it does over and over again. We're in the premium right now. And it's no coincidence that it's going to take this pool of liquidity, which is a daily previous high, right, of yesterday, in a bearish fair value gap in here at this time. This is when it happens. And when it doesn't happen in a macro, like we look for trend continuation, right? So right now the micro trends are up. So the only trend continuation trade that we could take today, right, is 50% of this leg right here on the 15-minute, which would be down probably in this fair value gap. I'm assuming would be 50% of the range. So if it came down, pulled back into 50, we buy the trend that way, right? It's 50% PD array. It's a big 15-minute bullish gap right in here as well. So that's the other thing too. With targets, I want to touch on targets real quick. Say we take this daily previous high and we look for the unicorn model. This expansion leg up, right? It might reverse here, but only to seek 50% because this is the expansion leg, right? So you have to be careful when you're taking your target that you don't, I mean, these lows are probably what they would target, and you could say that the premium is exhausted, if you know what I mean by that. And now they want to take the lows out of here because it took the daily previous high out. But you have to watch when you're in an expansion leg like that, and it's taking out weak highs. Let's say this wasn't the daily previous high, and this was like a weak liquidity pool. It'll pull back to 50 here, and then go. However, I have a rule. So if any major liquidity was swept in a premium, I do not look for buys off the 50 anymore. I consider the premium exhausted, and I no longer take trades, buys, until it sweeps the lows. That's my rule. You can follow it if you want to. You can take my trades if you want to. It's up to you. We're awfully close to that liquidity pool here. We're in a 15-minute bullish gap here. Or sorry, a bearish gap. Trading in one right now off the left. The pool, the draw on liquidity is above the red line here in the daily bearish gap. So what I would like to see is, well, I'd like to see it take it now, right? But I would like to see maybe let's trick some weekend sellers in here. Come down and rain on their parade, but we'll see. I just noticed that price is taking its time this week to do whatever it wants to do. It's lagging very slow because of what's happening economically, not necessarily geopolitically. There's a lot of uncertainty right now with major banks and institutions. And that's why you see a bad week like this. It's not a horrible week. I'm not losing accounts in one day. Nothing I can't come back from in one trade. $8:04 Pacific. Still have a bit of time, I suppose. To the end of the first EM macro. Literally just came like what? 17 points from the liquidity pool. Okay, we have a 15-minute bullish gap sitting right in here on my other monitor. Go look at that, I guess. We have time to talk about stuff. Nothing's happening. We have not swept the daily previous high inside of this daily bearish gap here that we're waiting for. We have a 15-minute bullish gap it may want to seek first and then go. Maybe that sort of creates another engineer of liquidity where people are starting to get into this sell now. People who like guesswork. Well, I guess it's coming down now. These candles are red. It's going down, so I should probably get into the sell here. Okay, go ahead. That high right there will get attacked. Where do you put your stop loss? If it doesn't, well, you're just getting shit lucky and creating bad habits for yourself. Now, here's something I should look for as an SMT. Making sure that NASDAQ didn't take, and I don't use SMTs too often, but I do in certain cases where like, what's going on here? You know what I mean? But we'll see if it applies to the NASDAQ on their monitor, and I'll see if there's an SMT. The NASDAQ has taken up the daily previous high, but the structure is too different. I can't consider that this trade. The like at one time it can be the same chart, right? The US 30, the NASDAQ, it can look quite the same, but it hasn't looked quite the same in a long time, right? So I'm not going to consider this an SMT just because the Nasdaq is trading above the daily previous high, right? In fact, SP happening at the same time. So let's go see what time it happened at. So so it happened quite a while ago. Yeah, so if the charts look the same, or if ES kind of looked the same kind of chart pattern, the previous high was ran through is the same chart pattern, then I'll consider this an SMT right here, but it's not, so I won't. And you'll barely see me use SMTs. Like when I trade the Dow, so if you're a Nasdaq trader, which I do take Nasdaq trades once in a while, chart looks good, then yeah, using ES is SMTs is smart. However, this is the Dow, it's a beast of its own. $15-minute is now bullish because we inverted a 15-minute right here. Okay, so there's a gap in here. See to the left, this candle inverted it. It's now bullish because we inverted a bearish city down candle. However, we're lucky, we're in luck. If it sweeps the daily previous high, it automatically goes back to a bearish, and we have our 3 out of 5. That's all we're looking for, is 3 out of 5. See if the 1 hour get changed instantly as well. If we sweep, that doesn't look like it. 5-minute itself, be really far back. Does it get changed at all? Oh, did we run through the 5-minute here? No, we didn't run through it. So the 5-minute remains bearish. If you go look to the left, see it didn't close over it. This didn't go away. We got 5 and 15s above the pool's liquidity, so we're going to be safe. Nice. That will give us, we know now no matter what it does down here, if it comes back and sweeps this, we have our bearish buys for the day. We have to sweep the daily previous high sitting inside of a daily bearish gap. That's all we need for the unicorn. It's that easy. If it happens, it happens. If it doesn't, it doesn't. I also just realized, I don't know how this skipped past me right now, or if I even want to admit this, but today we have FOMC, just the meeting minutes, not the full FOMC. But I did not even see that at 11 a.m. Yeah, so I didn't even see that FOMC. It's just the meeting minutes, so the impact isn't as high as what's called FOMC statements. It's just the meeting minutes or FOMC, press conference, whatever it's called. So I don't know how I missed this actually, and this could explain why price is a little bit wonky. And I think I missed it because we had a double FOMC just a few weeks ago. Like I somehow missed that. Well, that could explain why price is doing what it's doing. For the Monday and the Tuesday and perhaps the Wednesday. All right. Did you see that? That's wild. And look when it happened too, right at the macro ending. Look at this candle right here. What just happened? That would be so funny. So there you go. There's my point right there. So everyone who said, "Oh, you just sell anyways," because just guessing the market's going down. Look what just happened to you with the slippage here. If you decided to get in right here off this gap right here, it said, I'm going to get in right here because I don't think it's going to take it. Look what just happened to you, the slippage right here. Look what just happened to your account right here. This is crazy. Watch this. You got in down here off that gap because you predicted it was going to go down. 216 point move. That's insane. That was wild. Right at the end of the macro, like right on the money. See why we don't guess? It's just like down here, 15-minute. Right? Look at this. Market comes down and it fails to take out the low here. So this is where what just happened here, as above, as below. Oh, I'm going to get into that buy because this is what I think the market's going to do. Look what just happened to you right here as the opposite right here. You know how much slippage you would get on that? Oh, man. All right, well, here's what we're going to do, folks. We're going to see if I can pause the stream and come back for the 3rd AM macro. I'll be proceeding now with real discretionary caution. Even if it looks good, I might not take it because it's going to be some, I guess I can't say that word on YouTube. Going to be some trickery, we'll say. And I don't really foresee the market just wanting to necessarily do what we think it wants to do algorithmically. It's been disrupted. I don't know what the point of that was right there other than punishing people for anticipating it going down. Look, you even have this. Screw it, man. It's not going to take it. It's going to go now like it did down below. So it comes down and it displaces over this breaker block right here. Look, this breaker block right here got displaced through right here. So here's your breaker block here. Right? Got displaced here, leaving fair value here. And you just said, you know what? If this thing's going down right here, you just got butt hurt. Slipped a high leverage trade that just wipes you out. That is wild. Let's look and see in the liquidity pool where it actually went here. That's not even off a news candle. Like, what the hell is that? Did Trump, does anyone know if Trump just spoke? Give me a second. Yeah, thanks guys in the comments. I didn't know that. I was just talking to AI about that. That was wild. So yeah, did people ever get punished for trying to take that sell early? This is so funny. I was just talking about that down here. Somebody saying, "Oh, you just get into the buy anyways." Look, you just got. I love that that happened to people in a sense. You should just learn then, right? All right. You guys put it in the chat if you can still hear me, if I'm still on the feed. I just had a meltdown on my computer. Wow. This might be the end of the stream too. Sorry about that, folks. Anyways, what a pump that was. It'll be interesting to see here. What I'll do is I'll come back to YouTube for 30 on macro. Oh yeah, okay, I'm still streaming. Bit rate went down. Thanks guys. So let's have a little look for a trade in the 30 on macro, right? I just don't know if I can pause it that long. See what it says. Okay, whatever. I'm gonna stay on the call here till 30 on macro because I think it's just better for like algorithmic reasons. I stay on longer. I'm just gonna put my mic on mute and mark the macro in. What's my bro saying? Okay, yeah, good idea. So yeah, See you in a bit, guys. Right. Well, here we are back here. Doesn't look like a sell is too promising today now. Um, we'll see. You look on the 15-minute, it's quite the reach. With the new news out, I'm just looking into the news right now, reading what the whole Trump thing was about. It's quite possible this market just flips into a bullish market, very bullish now. Yeah, it's looking like it's not the end of the war, but it's there was some statements made. And yeah. So and then we have the FOMC meeting minutes. Probably wouldn't even have traded today. Mind you, like there's just no opportunity again today. There was no opportunities on yesterday. Well, there was right at 9:15, and I didn't execute because it was at the end. Probably should have yesterday. That would have been a nice trade that I called. 150, 160 points, I think it went. This market's looking bullish now. And we have the FOMC meeting minutes at 11 o'clock as well. So I'm not very excited to get into a trade. But we'll see. We'll watch the macro out, see what happens. This is when fakery happens for sure. So you can see prices stalling here. What a nice trade this would have been. Let's look at the buy. Let's talk about why the buy would have been good, because there's nothing else to really see here on the charts to talk about. So let's talk about the fact that we have this beautiful daily previous low that was already taken right here at like whatever time that is, like 20 to Asia. Big, huge push up, takes out the New York AM high, and then comes all the way down and doesn't take the low. No idea that you know that. You have all this bearish gaps working against you, so you don't know. Mechanical rules, it has to take it, it doesn't take it. So we can't get into the trade. We had this push up, even if you decided at the last, like you can see that there's obvious expansion over the high here, right? So at this point, you could definitely say, I'd like to consider getting into this trade because you have this displacement here over the highs here. Doesn't even come back for you. It just goes, and then the highs are right here. So even if you did, like, you know, I guess just 100 points in there. But anyways, it didn't come back. Do you see that? So yeah, didn't want you in. All right, guys. Sorry about that. Can you put it in the chats, please? Can you see my 1 minute chart here in the chats? Looking for the 1 minute here. See up here, we're on the 1 minute. And we're inside this macro here. Can you see that we're on the 1 minute? I'm just wondering if that freeze that happened a while ago was an issue. Just put it in the chat. Okay, right on. Thank you. 1 minute's back again. I don't know what happened there. So I'm not really liking this price action right now at all. I'm gonna hang around and see how price reacts off this high. But we're expanding now. This wouldn't really be a sweep, would it? Right? Like we have the sweep here, but then we pushed up like this is just the wick, right? We pushed up 176 points expansion. This looks like expansion to me. You can see we just have a bullish momentum now, right? And with the new news that just came out with Trump talking to the reporters, I'm not too keen on the sell anymore. The sweep is weak. I do want to see if they trapped any sellers right in here. Pre-macro, right? So it would have to be like very sharp displacement for me to get in. Very obvious. Because like this is the sweep here, but it's pushing very, very far into the liquidity pool, albeit this is just a wick, you see. So we'll see if it trapped any sellers. See how it reacts off this black line right here. But I think this thing wants to go bullish now after that the news. We have FOMC meeting minutes at 11, so like it would, you know what I mean? Like it makes a lot of sense that price would like to just sort of consolidate, right, in this range until right here, which is 11 o'clock. We're over here at 11 o'clock. FOMC meeting minutes will begin there. Then I think I'll be looking for a trade on gold and on US 30 tonight in Asia. 5 p.m. Tokyo Open. Super money after FOMC. Like really money. It makes all these fake outs during FOMC, grabs people's stops, destroys Instagrammers and accounts, and then makes their real move during Asia. However, I don't think the war is over, like someone said. It just sounds like Trump told the media something about like he's going to back up Israel, or Israel will do whatever I tell them to do, which is kind of funny. It's fucking weird, but yeah. All right, we'll finish out the 3rd a.m. macro here, and see how price reacts. But I can't trade this shit, right? Like, I was hoping for a nice clean trade here. I guess like you don't even really know. I don't even know how to find out when Trump's talking to reporters and having stuff like this happen. That is just wild. Crazy manipulation leg. And I want to know if anyone got into this sell right here thinking, oh, it's not going to take it, and just decided to get in right here up this bearish gap right here. See it over here, more or less, as well. Displaced over the low here. Someone got in here, came back right in here, and then just destroyed your account. Especially if you have a real slippage, real accounts. Like broker slippage in here. Not on a simulation. Prop firm simulation. Yeah. We have this push up. I'd like to maybe start doing post FOMC Asia. Now let's go to gold. I put an alert in gold and have a quick look while we're just sort of messing around in here, not doing anything. I'll put an alert just in case something drastic happens, which I doubt. Put it right here, and then I'm gonna go over to gold. Okay, it's fine right there. Let's go to gold. Ah, same thing happened with gold too, eh? Right here. Wild. I have an alert set on gold. I guess it's not going to go off now. This is only in futures. I had an alert set on this 4-hour bullish gap in here where I wanted to take a buy. This thing might already take off. But you know what? Let's see what the FOMC does first. Like the indices like US 30 like to come up, come down, rain on the buyer's parade, get someone to get back in, come down, like it's crazy. But gold doesn't really work that way. It's really smooth. Like gold's smooth. You know, like it takes stop losses out, like it faked the buy here, it took stop losses out, right? It does, but like not as violent and as intraday. Not as intraday, like the indices intraday, like take out the AM high, PM high, Asia, London, like it's just vicious to everybody who tries to swing trade it, right? I got an alert set down here. This is Oanda gold spot. So I put an alert over here on a 4-hour bullish gap, right at this price here, 4424. I'll be looking for a nice buy off that if it ever shall return. If it doesn't, well then we'll see how wild the markets are. We can look for sells up in here, but maybe a little bit deeper into this gap, like up here. See how the price reacts today off it. So we have opportunities everywhere. Don't really care about if we get into a trade today in New York. I just trade the 3rd AM macro, first 3, and then I'm done for the New York. And I may or may not look for a gold trade tonight. We'll see. It's just that time of day sucks for me. Like I want to be out doing stuff, right? And not be on a computer at 5 p.m. Pacific. It's the worst. So we'll see. Just really don't think anything's going to happen. In fact, FOMC, the first 2 AM macros is all you really can hope for. Technically speaking, the 3rd AM macro is the beginning of lunch in New York, which during FOMC is going to be even lower probability. I think it's going to do exactly what I said with my squiggly lines there a while ago. It's going to go right to the meeting minutes somewhere in this range. I just don't foresee like big, huge, rapid decisions, like taking the high and then bang, coming down, going back into the discount quite yet. I do predict maybe based upon Trump stuff that's going to be bullish today, but I really don't care about my predictions. It's just whatever. Doesn't matter. Like, what do we got here? I can't see price coming up, taking these highs, and these highs here, to be honest with you, are not like a sweep of liquidity anymore, right? We're in expansion mode. I'll show you what I mean by the 1 hour. So we'll run the 1 hour. We left the discount down here below this teal line, premium discount down in here. This looks like full expansion mode now because of the Trump tweet, and we'll see how the FOMC meeting minutes fare out. I know Jerome Powell is gone now, and there's like a new guy. No one knows how he's gonna start dealing with these meeting minutes, so this could be an expansion up to last week's highs up here, either today or not today, but tomorrow. Right, this is the expansion leg now, you can see. And here's my point. You never know though, depends on how FOMC goes, but this could be not enough to stop it in the premium, to exhaust it. It's just not an A plus setup anymore, right? We've expanded too far past the liquidity pool here, and now we're just kind of in a range inside of it, and it, like, this is not a sweep. If it takes it, it just looks like it's bullish, right? Not a clean sweep. Like, if this right here happened in the macro, that'd be something else, right? Of displacement gaps and everything. You can see, look what happened here. This is why I don't trade out of macro right here. So, people who saw this sweep off the red line come up the wick, came down, okay, and displaced all these fair value gaps over these lows here. It just got stopped out of everywhere. Like, where are you gonna put your stop loss? Like 176? I doubt that. You put it somewhere up here in the short-term high. See the short-term high right here? You just got stopped out. Oh, sweep of liquidity. Okay. Displacement. Okay. Blah, 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 blah. Oh, we're in a bearish gap. Okay. Look what just happened to you. Because you didn't listen to the model. Now we're in this macro here and we're safe. Nothing's happening. There's no sweep. Nothing. So, saving people from losses, left, right, center. If you don't take a trade, that's fine. At least you preserve your account. Anyways, I don't see this doing anything today, and I'm tired of talking about nothing now, and nothing's going to really happen. We have no trades for the week. We have a negative 0.5 R from yesterday for the entire week, as we took that at half risk, because it was a little bit of a FOMO entry and a little bit outside of my model, but not quite. So the buy still happened yesterday. It was still a really nice buy. I called it. We can look at that right now real quick. Maybe that will save me from making a video about why I took the buy, etc. Here's the redistribution right here. So this leg, 4-hour bullish gap, most important part, right here where I'm circling. Here we have Monday at noon, pumped up, came up, then came all, so there's buyers in here, came down, rain on their parade right here. Redistribution, 4-hour bullish, up here, see, our fair value gap, bias, order flow method, super money, we're in the buy. This is an amazing options trade right here. So listen, like, we couldn't get in on futures here. Like, I'm not getting in up this bullish gap. It didn't do jack shit. This didn't displace, nothing, tapped it in and went. Okay? Came back down. I didn't FOMO in here. Came down, punished everybody right here. However, in this buy, I was waiting. And if you go watch my live stuff, see, I said, this is your line right here. I'll put it in red. I said there was a 5-minute bullish gap sitting right in this. Let's leave it this one in black right here, sitting right here. So this is where we're trying to get in, right here, but price did not allow us to get in. Never came back to this bullish gap in here. This is the breakaway gap. Came in, put out a kill shot here, buy, whatever it was, or a buy opportunity. Came down, rained on your parade. Stopped you out, right? Took out obvious stop hunt here. I decided, okay, you know what? This could be the one right here, half risk. However, it came down and stopped me out second time. Now, I didn't fall for this one. I don't fool me once, Shame on me, fool me twice, shame on you. Or shame on me, sorry. Just fucked that up. Comes up, comes down once again, but it came exactly to where I said it was going to go. And here, I should have ignored it and knew it was going back here. It did, live. However, here's the entry. Turn on the EMAs. What do we got right here? Cross the 50 right here, right at 9:15. Like right at 9:15. I should have taken it, but I was like, you know what? 9:15 is my cutoff. I do not chase price ever. Ever. Here's your stop loss right here. Below the expansion of the candles. 52-point stop. Right? Do you know what I mean by that? Below the expansion candles. Right? If you want to put it below the low here and go 70, it's pushing it. So below the expansion. Right? Expansion is in all these bullish gaps. There's a little one in here. Bullish gap right here. Then you target the high of the range, which was a high wick up here. So you have all these options over here. This gives you a 1 to 2.6 right here. Use that day. Don't be greedy to you. Gives you all day long. Right? Using the high of the range. If you wanted to use these two highs, you got in trouble there. So this is also what happens when you start trading too much past 9:15 and stuff like this happens. It doesn't even go into the discount or into the premium. That's why I'm not interested. Doesn't matter if I didn't get it. So anyways, that was a successful trade. Instead of this being the expansion leg, came all the way back down, rained on our parade once again, down in here, big expansion up, right? Once again, grabs it again in Asia. This would have been a sweet trade right here. Let me tell you, Asia's money sometimes. See that? All the way up, and then boom, tries to rain on your parade once again. Anyone who moved their stops up over here, my cursor is on this level right here. It's where people probably got in. Stopped you at a break even. We weren't able to get into a third redistribution trade. Did not sweep liquidity, and we have this expansion up. I hope that makes sense. You see that the logic here always holds up. We don't always get an entry. We don't always get a position. However, like I want to talk about one quick thing. Was yesterday's trade. I want to go back there just for a second before I end the stream. We didn't get in yesterday off this redistribution because in futures trading, listen up guys, in futures trading, you're looking for an entry model on the 1 minute to be able to put a stop loss somewhere. So you need structure to build, expansions, displacement gaps to give you confirmation, but not necessarily confirmation. It's good to have that. It's to put a stop loss somewhere like this so you can capitalize on a high R value like something like this, 1 to 4 almost. But in options trading, which we're going to start doing here, I don't know if I'll be doing it live right off the hop. I still have to learn everything. But this trade right here was a no-brainer buy. Redistribution sweep, 4-hour bullish gap. So right at 6:30, you can enter an options trade right in the money, right here. So down in here, swept it, you wait, 6:30. In the money up here somewhere, you bought it at 6:36, you bought it options. And this trade right here paid out. I don't even want to talk about how disgusting the money is right here. 316 points in half an hour. Like you would just get out there, like it doesn't have to, you don't need a target. This is where you get out. This is a disgusting trade for options, and we're going to start taking these option trades. Futures, I end up walking away with a minus 0.5 R here, whereas in an options trade here, I would have destroyed. Now I say destroy, I mean, I don't even want to talk about numbers yet, but I'm talking like something disgusting. Like absolutely filthy money, disgusting, crazy, these fast moves like that. Because for those that don't know about options, it's based on speed and time. And the speed of that market, how fast, how quick, how many points that move in that amount of time. That's where, with these 0 DTE contracts, or like they expire at the end of the day, are just money. And we're going to take this channel into that world. once I get a bit of a handle on how to use the software, get a broker sign up and all that, we're going to show you guys. It's just going to be disgusting. It's going to be basically too much winning. You're going to get tired of winning. It's too much winning. I'll leave it right there with that. Bye, folks.